Hello and welcome to another update video about Ethereum. I think it's worth taking a look at the daily chart briefly today because Ether is, well, not yet in a process or in a state in which it completed its current correction. So the correction is still unfolding and the first micro support in the correction has broken, which indicates that we could be here. If I zoom in a little bit, we could be in this last wave down of this correction. The problem, if we really are already in the C wave down, and that's something I've been mentioning throughout the week and last week, well, we might challenge the important $2,975 level. I think on the 1 hour chart, it's 2,977. That might just be because it's a bit more difficult to, yeah, whatever. So it's 2,975, 2,977. That doesn't make a difference at all because we talk about a sustained break below that level. If it happens, then Ether will most likely lose its impulsive potential on the chart. Yeah. At the moment, it seems as if we might break below that level, but I've seen many people get scared and leave trades even before support levels have broken, just because it looks like that. But let me tell you, in crypto, things can turn around at an instant. So as long as support is holding, I treat it like that. Of course, I point out the risk, but I still treat it like that. What I can tell you is, what I wanted to tell you is what would happen if we break below 2,975, so that you're prepared. We talked about that before, but I think it's worth talking about the next support area below that. But it is not just, okay, we dip from support into support, yeah, we break upper support, we're testing lower support. Let me tell you that Ether won't become bearish, yeah, most likely not. It's still a bullish count, but it would make it much less reliable, this chart. Yeah, so the chart would become much less reliable and it would become much more difficult to read because we would be morphing into a diagonal pattern. So that's the structure I'm dealing with. 1, 2, 3. This would then be a wave 4 pullback, probably into the region between 1795 and 2460. So based on this count, I wouldn't be surprised if the price breaks down and test the $2,000 region again. Okay, that's the risk that we deal with. Should the first support level break, the upper support on the daily chart, it's at $2,975. Now again, that wouldn't be bearish. We would still have a chance to rally once more in a fifth wave, but then that could be it in the bull market, and we might not get to 8 to 12K, maybe 8K, but I would definitely doubt Ether's potential to reach 12K. So that's the downside from, when a chart morphs from an impulse into a diagonal. But they can always extend as well. So it's just that the targets to the upside might be a little bit more muted, yeah, not as aggressive. And we would have to deal with deeper pullbacks along the way, which is to a degree great because it allows for, deeper pullbacks, buying back cheaper. In reality, most people won't do it because they get scared. But in theory, that would be great. But then the downside is whenever we're dealing with a diagonal, it doesn't respect the Fibonacci levels that well, and it will be more difficult to track. So now let's go to the shorter time frame. Here, really nothing has changed since the last update. Still have this third wave top on the 11th of March. A wave down, possibly the B wave topped here. And then we're now coming down in wave C. But then again, you see the C wave would be very short. If it wants to hold that 2,975 level, it's very short, isn't it? So it would run out of space most likely because the A wave is so long. What I would prefer still is a more extended B wave, as highlighted in yellow, but the chances for that reduce below $3,334. I'm currently tracking this as a WXY structure, and the Y wave would be an ABC. At least that's what I'm tracking at the moment. It's 3 waves down at the moment. We can discuss and debate about microstructures here all day. What is most important is, do the bulls turn up before the price breaks below 2,975? There are still 5 or 6 different corrective patterns I could show you here, which could apply, and in which maybe the B wave can extend. What's most important is that the bulls turn up before the 2,975 level breaks. That's really what traders need to be concerned about. Not so much about the microstructure. I mean, that's sort of, yeah, we're tracking it. But yeah, I mean, again, further upside extensions possible still in the B wave. A break below 3,334 will make that less likely, not impossible. Corrections always morph. Below 3,334, the previous swing low is going to be next support at 3,252. And then obviously here this low at 3,070. But it will then be very likely that we're challenging 2,975. And ideally it's holding it. Well, if not, then I would have to revise for the first time in a long time my assumption on the daily chart. I think this Ether chart on the daily hasn't changed in 1.5 years. Okay, the potential and the count. I mean, maybe I've made small adjustments, but the idea that this is an impulse, that we've seen the bear market low, that hasn't changed since summer 22. So it would be the first time I have to change my daily. That's fine. That's what markets do sometimes. But I just don't want to scare anybody, because it wouldn't be bearish. It would still be bullish. We're still in a bull market, but it would just mean that maybe with ETH we just need to be a bit more on the side of caution, and that it would definitely reduce the probability of ETH outperforming Bitcoin. Yeah, I would say that. Okay, that's my update about Ether. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.